Hi, and welcome back to another episode of Mind Renovation Nation. Yes, we're live. We're doing a live cast about how we help aspiring real estate investors build their real estate nation through small multifamily investing. And today I have an exciting live cast for you. We're going to be discussing the future of small multifamily investing and navigating the impact of bank failures. Yes, we're going to be talking about bank failures today. And how does that impact you? What impact does that have on your real estate portfolio, on your holdings, and what should you do? So go ahead and grab a pen and paper. You can take some notes today, and let's go through and explore. So um, here's the question I have for you. Have you ever felt overwhelmed trying to manage your small multifamily rental portfolio? Do you ever wonder why you're not making the income that you'd like to off of your real estate investments? If that's true, then Red Maples, our property management company, can help you out. Go to www.red-maples.com, and there you'll find lots of information, resources, and ways that you can help grow your real estate income, reduce expenses, and improve your ROI. So, question about the real estate market in general. Do you struggle to balance your time uh, managing your real estate investment right now? And what are you going to do about the bank failure that has happened here recently with two banks, two major banks has failed. Silicon Valley Bank and Signature Bank both recently failed. And I did a presentation here recently at one of the meetup groups that I go to, the St. Charles County Real Estate Investors Association. And we talked about this. We talked about what caused the failure. We talked about what are we going to do about it and what happened. So here's some interesting things. And let's, before I get into why Signature Valley Bank failed, what happened, and all that kind of stuff, it kind of helps to understand history and understand the last time banks failed, what happened, and what did we do as an economy to recover from that. And I told the story back in 2009. My mom had a massive heart attack for the second time. It was a five-way bypass surgery that helped her recover from that heart attack. And the question is, why did she have that heart attack? Um, well, there's a lot of different reasons and a lot of reasons related to health as to why somebody would have that heart attack. But just as blood flows through the body, and that helps to keep our bodies alive. Currency is like blood to an economy, and it flows through our nation and it keeps our nations alive. Well, when banks fail, it's like having little minor heart attacks in the economy. And there's actually a graph here. I'm going to try to pop this up and see if you guys want to take a look at this chart. Now, I know it's small and it's tiny, and I'm going to zoom in just a little bit for you to help you out so you can see this chart because I think it's important. This is right off of the FDIC website. And in the FDIC's website, they talked about bank failures. In 2008, there were 25 bank failures. And you can see here, this is in the millions, $373 billion was lost in 2008, which is what caused a financial crisis in the economy. So, what about Silicon Valley Bank and Signature Bank is so massive heart attack in the financial markets, which is going to impact real estate? Well, here it is. If you look at the 23, the FDIC said the insured money that was the non-insured money, excuse me, that was lost was $319 billion. So only two banks lost $319 billion. And so that's like a massive heart attack to the economy. And like I had explained to the group then, when you're looking at a heart attack and you have a massive heart attack, there's a couple of things that happen. The first thing that happens is you have to rest. You have to get the rest that you need after immediately after the surgery, and that starts your recovery period. And then you can't just get up and go for runs like you used to. You have to take some time and you have to recover from that. So it requires some getting up and walking. And then eventually you're going to be able to go on a little bit longer walks. And then eventually they will have you do physical therapy, and you'll go through some therapy and some rehabilitation. Then eventually, after a lot of hard work, you might be, after months and months and months, maybe even a year's time frame, you might be back up to operational again as a human being and functional. You got to take a couple of months off of work in order to recover. And all these things are parallels is to what happens in an economy when you lose 300 plus $billion. So here's kind of the synopsis of what I had found. In 2008, 25 banks had failed in the US. So what happened? This led to a decrease in available credit. It also, in turn, led to slowdown in real estate sales. So I know that everybody's talking about the housing shortage. Okay, but in 2008, we had a slowdown in housing sales, not because of inventory, but because of available credit. And what you're seeing is interest rates continue to rise in the economy here recently. And there's actually some consensus that there's going to be some regulation put in place to these banks. What's going to happen to the banking industry? Well, number one, it's going to become more difficult to lend money, so people will buy less houses. And then the second thing that's interesting about this available credit is that you're going to have consolidation of banks because the smaller banks won't be able to adapt to the regulation. So a lot of them will sell to larger banks, and thus those larger banks are going to be tighter regulated and not lending as much. So what does that mean to you as the real estate investor in small multifamily? It might be a little easier to rent, but a little bit more difficult to get the money to borrow to buy. And so that's, I think, really important to understand. Now, to put this in perspective, during the Great Depression, over 9,000 banks failed in the US, which led to massive closures. We had devastation on the real estate market like we had never seen before in this country and during the Great Depression. And many property owners were unable to secure loans to purchase or maintain those properties. So here's something that's interesting. Let's say you own a small multifamily, and let's say your small multifamily is, I don't know, 25, 30 units, and you've done well, but you try to go refinance that property to pull money out to fix it back up to keep up with some of the competition. That may become more challenging as we go into this season of currency slowdown. The other thing, according to a study by the Federal Reserve Bank in Cleveland, bank failures can lead to a decline in property values in the surrounding areas. A study also found that the values in areas where banks failed decreased on average by 6%. So if there's additional bank failures, that also means there may be decreases in property values. But here's the other thing that I talked about in that group. Interesting. When inflation runs rampant, what eventually happens to property value? Well, it's an interesting question. The only way to increase the value of the dollar so that your dollar can buy more is for housing prices to come back down. So, and during this process, what you might see is because of the availability of credit, you might also see a decrease in value or not as much appreciation in value to your small multifamily investments. And so I think it's extremely important to understand is that it might not be a period. I mean, consult with the proper experts on this in your specific market, but it might not be a period right now to sell your small multifamily. It might be the absolute right period to hold on to your small multifamily. And what we might see over the next couple of months is it might be the right time, given your cash position, to buy small multifamily. Here's another thing. When banks fail, they often sell off their assets, including foreclosed properties. This could include an influx of distressed properties that can lead to a decrease in property values and an increase in competition for buyers and renters. So why is this important? Well, we just had at the St. Charles County Real Estate Investors Association a lunch bunch meeting. And during that lunch bunch meeting, we did talk about short sales. And in that short sales presentation, you can go back to some of my Facebook posts, they did talk about the wave of foreclosures that are coming into the real estate market. Kind of sounds a little bit like a revamp, maybe not on the same scale, but a little bit along the same lines of we might be seeing a market trend that's kind of mirroring or mimicking what we saw in 2008 and 2009 in the real estate market. So what can you do about it? Well, if you could go back in time, would you have positioned yourself to be in a good position for when that market came? And did you position yourself now to be in a good position to buy as the market is turning into what I'm going to say is the small multifamily opportunity like you have never seen before coming up here shortly? And that is why we have positioned our company to be specific to small multifamily, is because I've rode these trends for years in the property management industry, and we have been through various different cycles. And so now we're at that time in the cycle where this might just absolutely be the best time to look towards small multifamily. The other thing that bank closures and failures can also have a ripple effect in the economy. What happens? Well, it leads to job losses, decreased consumer spending, and thus can further impact real estate markets. And people may be less likely to purchase a home at that time or invest in properties during uncertain economic times. So, what does that mean for you as a small multifamily boutique investor? Well, I'm going to tell you right now. And first and foremost, it means that people are going to be moving out of an A class property. What is that? An A class property is a property with an overabundance of amenities. This might be a property that has a swimming pool on the property. This might be something that has a dog park. This might be something that has additional storage. And when they look to downsize during a down economy because they've lost their jobs, where do they typically go? Well, as long as they've maintained good relationships with their previous landlord, they're going to look to downsize to a small multifamily property. Now, here's the interesting thing about small multifamily. Uh, I often have conversations with investors. I meet with them all the time on a regular basis, and I review their portfolios, and we look at a number of things. One of the things that we look at when we do that review is their rental comps. And I pull rental comps on every unit in the portfolio when I meet with a new investor. Why do I do that? Because the real estate market is just that. It is a market, and markets move. They go up and they go down. And I want to know, where is the current market on their entire portfolio? So let's say that you have some properties in St. Louis right now and they are renting around $650 and you are down in South County. There are pockets down around South County where that 650 rent might need to be closer to 750, but you don't know unless you can pull a good rental comp. And I also think it's important when you pull rental comps that you pull an accurate rental comp. So many times I look up at a portfolio that I'm going through for the first time and I see undervalued rental assets. And what's interesting is I've had conversations with owners and they say, there's no way I'm going to get that price on my rental property for rents. Like, this is St. Louis. Are you crazy? And what I say to them is, maybe you can't get that price, but I know that from a real estate perspective, from a property management perspective, we get that price all day, every day for comparable properties because we live in the real world based upon the market, not based upon what skills and what things that you have developed, but what skills that we have developed over years and years of practice and research on how to be successful at managing small multifamily real estate. So I told you we'd talk about Silicon Valley Bank and Signature Bank and why they failed. So here you have two banks heavily invested in things like crypto. They also have heavily invested in fixed assets and government bonds. And those led to a drop in market value and some risky investments that were involved in this situation. They were invested in some tech startups and things of that nature, and they were promising, from my understanding, they were promising investors very, very high returns to move their money into their accounts. And so there was a lot of uninsured money moved into these two banks. And so, unfortunately, just like my mom, this was to our economy is going to be very similar to that massive heart attack that we had in 2008 for full circle cap on all of that information. So, a couple of other just quick notes that I have found interesting. What we don't know is that our economy has had other little minor heart attacks, and you just might not know this: currency heart attacks and bank failures and foreclosures. In 2020, do you know how many banks failed? I bet you don't, because we didn't lose $3.19 billion. But I'll tell you right now that according to the FDIC's website, there were 4 banks that failed in 2020, but you didn't even hear about it. The reason you heard about Silicon Valley Bank and Signature Bank on the news is because of the massive loss in currency to the market. And so that's what I'd like to finish up with and say that if you would like help navigating these waters as banks have failed and we lost this currency, there's limited access to credit, and you just wonder, like, how would I even refinance my small multifamily real estate portfolio? What do I do about all these increased costs to my insurance, or my property taxes are going up, and I'm not making enough money off of my properties? That's something that we would love to have a conversation with you about at Red Maples. Again, you can go to red-maples.com. And I hope you guys have enjoyed this live cast. If you have, post in the comments, post what you think's coming up in 2023, 2024 based upon these 2 bank failures. Also, throw in, smash in that bell, hit the like button, share this live cast if you got value out of it. Appreciate you guys tuning in and joining on. This has been Nathan with Mine Renovation Nation.